This is On the Charts with Nick Radge, your Australian stock market update, highlighting stocks on the move so that you can invest with confidence and success.
The information in this podcast is general advice only and does not take into account your personal situation. Please consider if it is appropriate to you and consult a licensed professional before making any investment decisions. The information provided is believed to be accurate at the time of recording.
Welcome to the On the Charts podcast, episode 195 for Monday, 15th of May. 2017. Now today is the start of our special week of looking at the multi-year timeframes for a lot of the charts and looking at the longer term market direction. And this analysis is brought to you by the same team that called the top of the market in 2007 and called the almost exact low in March 2009. We'll be covering all the main global indices, including Australia, all the main global commodities that drive the Australian share prices, and of course your favourite blue chip stocks. This is big picture stuff, but only available to members of the Chartist Pro. If you're not a member, head over to thechartist.com.au and take up the 2-week trial. And remember, this special report week starts today exclusively to members of the Chartist only. Let's get on to the markets. The US last night continued to trade quietly. The main indices finished more or less unchanged in what continues to be a record stretch of low volatility. This was the 13th session of less than 0.5% move in either direction for the S&P 500, the longest since 1995. Commodities traded slightly higher, as did the Aussie dollar. Reports of another North Korean missile launch had minimal impact on the US night trading, and unfortunately the week ahead really doesn't offer any data releases or other events to break the current deadlock. In Australia today, Qantas has had its credit rating upgraded by Moody's. Shares in Qantas, which have plunged in the last week, have been placed into a trading halt at the request of the company. And the TPG private equity group attempting to buy Fairfax Media has switched to an all-cash, all-company bid. Fairfax shares rose 6% after the new bid came in at $1.20, and it also shows that TPG is serious about the purchase. Also in Asia today, Chinese data was softer than expected. Industrial output rose 6.5% versus the expected 7%, and retail sales were slightly below forecasts as well. At the close, the ASX was more or less unchanged, but actually had a late bid come right in the last minute after it was about 0.2% lower. Aside from that strength, the market only managed to break into positive territory for a brief stint just prior to lunch. Banks were slightly firmer on the day, but the small caps were almost 1% lower. Sectors were mixed. REITs and consumer staples were the worst performers. We discussed the bullish prospects of Flight Centre back in episode 179, and the follow-through has been nothing short of very impressive. Back then we discussed the bullish setup known as a falling wedge, where the breakout level was around the $29 level and the expected target was $38. Well, last week's high was $37.38, so just shy of that intended target. But the good news, at least technically, is that that strong thrust up now makes for a more compelling argument for prices to exceed that $38 level and go higher. Analysts are in two minds. Some remain upbeat, suggesting positive influences such as the international departure volumes being strong, market share increasing, and costs being well under control. Other analysts, however, believe the outlook through 2018 is too optimistic and that structural and cyclical headwinds remain. With a near-term high point most likely in place for Flight Centre, we'd now expect to see a brief period of consolidation, ideally on low volume, and that should last a few weeks. Once this phase has completed, it's expected that renewed strength will assert itself and that $38 barrier will be overcome. The next upside target, and quite possibly the end point for this immediate move, stands just shy of $41. However, if we're unable to measure positive sentiment, we'll allow positions to run and we'll manage our positions with a trailing stop. Also, Fortescue Metals is starting to look pretty interesting. The company is an iron ore producer and explorer in the Pilbara region of Western Australia. It's engaged in mining of iron ore from its Cloudbreak and Christmas Creek mine sites. Now, whilst there's several reasons to remain optimistic longer term, we continue to expect near-term weakness to remain in place. The company has an improving balance sheet, and that provides scope to increase its dividend. Debt repayment has gained traction, and cost reductions continue to improve. Also, the company has just completed a $1.5 billion unsecured note offering, which will be used to repay the 2019 term loan and further simplify its debt facilities. The bigger picture, technical stance of Fortescue is a stock in a corrective mode, and this weakness we're seeing now is expected to last quite a few more months. The immediate view is that the stock is very much oversold and could, within reason, have a quick bounce, but that bounce will be a short-term event and should be followed by ongoing weakness. The usual downside target at this stage of the trend remains a zone between $3.60 and $4.30, so just below where we are now. And pattern progression is not only defined by price, it's also defined by time, and that's actually going to be a topic that Peter Hammersley will be covering in July at Noosapalooza. And with regard to Fortescue, the time taken so far in this corrective phase is still well short of the typical time, which suggests to us that this corrective stance still will continue to unfold for several more months before a buying opportunity becomes apparent. My name is Nick Radge, and I look forward to seeing you on the charts tomorrow.
On the Charts with Nick Radge, brought to you by The Chartist. Join Nick and the team at Noosapalooza Trading and Investment Conference, 20th and 21st of July in beautiful Noosa, Queensland. Visit thechartist.com.au and click on Noosapalooza in the menu for details.